We're Compound Everything, and we talk money, markets, and investing. We're two self-taught investors, and today we are talking about Meta.
Meta platforms.
Meta platforms. And why did we pick this topic?
Well, Meta's a stock we've owned for a while, even from when it was called Facebook.
Yeah.
So they did a name change a little while back because they shifted their focus, I guess, from being a social media company, which was largely known for their Facebook platform. And they're now trying to shift towards the metaverse.
Yes.
Directly from their annual report, they say their mission is to give people the power to build community and bring the world closer together.
Okay.
So that's their purpose.
Right.
And so they're not just a social media company.
They're not just Facebook. And they were just Facebook.
Yeah.
That's all they had was just Facebook. And then eventually they acquired Instagram and then WhatsApp. And now they have Reality Labs. And so they're much more than just...
Yeah. So they have really like what they call two reportable segments. They have Reality Labs, which is kind of their hardware division. Their area there is focused more on the metaverse and development of virtual reality,
AR, VR,
all that. And then you've got their family of apps, which includes Facebook and WhatsApp, Instagram, and Messenger.
Right.
They've got these subsets of their family of apps, and a lot of their revenue comes, like the vast majority of their, pretty much all the revenue comes from those segments. And actually, Reality Labs has been a money loser for them until now.
Yeah. So I was actually thinking about it. How long ago? I was late to the party with Facebook, with getting a Facebook account. I was very slow to adopt a lot of tech for many, many years. So I think I've had a Facebook account for 14 years.
That's a long time.
And I was a lot quicker to jump into Instagram.
Right.
So as a user, I've been using it for well over a decade. We have a son who has the Oculus, so now he is intertwined into the metaverse family.
Which he loves.
Yeah, our older kids have Instagram accounts. So as a user of their products, it's been a long time, over a decade.
Yep.
But as investors, when did we take our first position?
Oh, somewhere, well, it was right around the Cambridge Analytica scandal.
Yeah.
And so that was, when was that, 2018?
2018, I want to say.
2018, so we've been kind of holding steady since.
Holding steady.
And it's been a roller coaster.
And it has. And it was, by 2018, we could see that Facebook had a very large network moat, but it also had a stickiness, right? And you would hear Facebook and Instagram just pop up in people's common conversations. And that to us is always kind of like, we should probably look into this company.
Right.
When it becomes a common word within people's conversations, like Google, right? I Googled that. So we started noticing everyone we knew would say, oh, I saw that on Instagram, or, oh, did you see this on Facebook? Or I read this on Instagram. And so it was just constant. And we would also notice that the amount of times people would pick up their phone, they would open the first app Instagram. They would open, we'd kind of watch, they'd open Instagram, they'd open Facebook.
And they'd spend a lot of time on it.
They spend a lot of time on it. And so we started realizing the stickiness of it. We started seeing the younger generation come up and really their whole world was just different with social media. It was how they communicated. It was how they interacted with each other. Yeah. And it's still, to this day, a very sticky and strong company.
Right. So they had a certain qualitative, we'll call it, draw to them. So people used it, and we saw increasing numbers of people using it. And they're spending a lot of time on it.
And they're spending a lot of time on it. So we kind of knew it was a great company, wanted to invest, but we thought the valuation was crazy. Yeah. And we just had the perfect opportunity when that whole scandal came out, and their stock dropped. So.
Their stock dropped substantially. And so we started taking position around that time. Part of what caused us to take a position was really twofold. One, they still had a strong user base. They had a user base in the billions. I can't remember at the time, it was 2-point-something billion people around the globe were using some form of Facebook product on a daily basis. So that tells you they have a moat. And then second thing is advertisers were saying they were going to pull, but only temporarily. I don't know if you remember that, but
only until July. I think it was
some of the advertisers.
And then the small print was like until July 1st.
Yeah, so they said they were pulling, but for a time. Yeah. And so that means that they really needed Facebook, or they found Facebook a valuable place to run their ads. Yeah. And so obviously we know what happened after that. It had a very good run.
And they were obviously blessed with the whole, 2020 crazy, euphoric bull run market like we've never, like you and I have never experienced that in our investing.
Well, not only that, but also during the pandemic, a lot of people were sitting at home.
Yeah, that's
and what were they doing?
Scrolling. I think they call it doom scrolling.
Right.
Doom scrolling, where you just sit there for like hours on end scrolling on social.
Yeah. So, I mean, they would have benefited from that as well.
Mm-hmm. So it went up to something like 380. Okay, that was around its high. And then all of a sudden, it took a turn. Mm-hmm. Now, the whole market came crashing down. Mm-hmm. We know that. So almost everything, like speculative, just tanked and whatnot. And big tech actually didn't tank except for Meta.
Mm-hmm. Well, one of the things that should have been a bit of a red flag that Meta was maybe going to start drifting down was actually there was some pretty heavy insider selling by Mark Zuckerberg himself.
A lot.
So there was a fair amount. And at the same time...
When was that?
That was sometime around 2020, right around its highs.
Right around 380. He was dumping.
He was dumping a number of shares. Mm-hmm. So according to insiders, it was probably overvalued. I can't remember if Sheryl Sandberg was dumping some too. I remember you saying, like, it's not just like everyone, there's a lot of selling by CEOs and whatnot. Yeah. Everyone sells for different reasons, but it was a noticeable amount. It was noticeable, and it was pretty steady. Mm-hmm. I mean, he didn't quite catch the top, although he managed to unload some at the top. Mm-hmm. But you could see him selling as the price kept going up and up and up and up. He was unloading more and more and more shares. Yeah. And ironically, at the same time, Jeff Bezos was actually unloading quite a number of Amazon shares. Yeah. So it had to say something, A, about the market, but also B, about their perception of the valuation that was there.
Of the company.
So that run up to 380, they probably, Mark Zuckerberg probably didn't think was terribly justifiable.
He also knew it was coming down the pipes it might have even been like the valuation could be justifiable, but he knew that investors wouldn't like the cash burn of Reality Labs.
Right, and that was the next shoe to drop.
Yeah. Well, actually, no, I think the next shoe to drop. So you had the run up and it went to 380. I think the first thing was the Facebook files in the Wall Street Journal.
Right,
a lot of negative press. It was just one negative article after another on Facebook.
Right.
And that kind of gave investors the jitters, as they say.
Yes.
Yes. And so that kind of like rocked it a little bit, and you could kind of see it going, down a bit.
Started drifting down.
Right. Yeah. So the broad market was dropping, and then you have the Facebook files. And then Apple came out with the whole asking apps not to track.
Right. That was a big deal for Facebook.
Yeah. And right around the same time, they announced the metaverse.
Right. And so I think the Ask app not to track, did that result in the decline right away? It had a 20 to 25% decline in one day. I think after an earnings result.
I
can't remember if that was just as
yeah. I don't know if it was the Ask app not to track. I think it was because
I think the revenue dripped off too.
Because they didn't know. Now they couldn't get back to that was a big problem for them because they couldn't get back to their people who are paying for their advertisers now and say, oh, look how well this is working, which is what people who were advertising wanted to know.
Right.
I think it was after that. You guys can fact check me, but I think it was because I remember a lot of articles coming out about why Google's going to be okay with it and why Meta's not going to be okay with it.
Yeah.
Right. So that was one thing. And then the metaverse came in and around that. And he was just saying, oh, we're going to be burning cash. Billions.
Yeah.
Yeah.
Yeah. Burning cash to the tune of billions.
And of course, he took a lot of mockery for even the term metaverse.
Right. Yeah. So at that point, the stock just dropped. And dropped. And it seemed like there was no bottom to how far Facebook would go.
Yeah. Now, at this point, we didn't actually sell at the top.
No, we didn't.
As much as a lot of people disagree with this, I actually think that Mark Zuckerberg is a very good CEO.
Mm-hmm. Yeah.
I feel like he really understands what people want. I don't think he is a good people person.
Right.
But that doesn't mean he doesn't know what to give them.
Right. I mean, Facebook, now having said that, Facebook does have a few strikes against it. So it does have the Ask app not to track. Mm-hmm. So they're working around that with AI and whatnot. It also has so much litigation going on.
People love to hate Facebook.
Facebook, yeah.
It's just so interesting.
Yeah. There's also issues around Europe with Facebook, and I don't recall the details offhand. I think it has to do with privacy and whatnot. There's a real possibility of some more regulation there. These are all things that maybe some hurdles in the foreground there. But
and another thing that we didn't mention that caused it to drop was everyone thought TikTok was going to take all their users.
That was a big thing.
And hang Instagram in particular, out to dry.
Right. And it turns out that hasn't been the case.
Yeah. And in the most recent earnings call, they actually said that their Reels, which are very similar to TikTok's, well, everything on TikTok, have been gaining about 24% more watch time.
Like, that's crazy.
And so that 24% spent on Reels is now not being spent on TikTok.
Yeah.
So we saw Facebook go from 380 and drop and drop and drop.
Yeah, to a low of...
I bought more again at 150.
Yeah.
Because I was like, I'm going to tranche again. I remember saying to you, if it goes to 150, I'm definitely going to buy more shares.
Yeah.
And then we saw it drop to 100.
Yeah.
And then we saw it drop all the way down to $88.
$88.
Now, at this time, because of the way investor psychology works, you couldn't talk to a person who didn't think you were an idiot if you were in Meta.
Right.
Right? Even though 2 years prior you were a genius. Now you were an idiot.
Yeah, now you're an idiot. Yeah.
Yeah, and I think the main argument was that only boomers use Facebook. Mark Zuckerberg has only ever built one company.
Right. Facebook is dying because of TikTok.
Facebook's dying. Yeah, that's a big one. Facebook, no one's going to, the younger generation hates it. They're going to stay on TikTok and all of this.
All that.
It's so easy to say when a stock goes down, if you liked it at 200, you should love it at 150, and you should really love it at 88.
Right.
What is that actually like when it happens?
Oh, it's
You've
difficult.
done your homework, you know the valuation, you're pretty sure on your research, but everyone's telling you you're an idiot, and the bottom's just falling out.
Well, the crowd psychology is there for sure, right? There's an innate sense that we have as humans to follow the crowd. I don't think there's any denying that. And then you start reading these articles, and what people are saying makes some sense. But then you got to go back to the numbers, right? And I mean, they were still making money hand over fist. And I think the real thing that ended up tanking Meta was just the cash burn from Reality Labs, and people were just wondering if this was one of Mark Zuckerberg's pet projects and whatnot. But it got beaten down to the point where it really didn't make much sense. Because, I mean, at some point, Reality Labs, they could just close it down. And then the cash burn goes away. So people were kind of throwing away their shares.
Right. I think they were a little scared too that not only were they burning cash, they were not able to get the same cash flow they could from their advertisers. It was kind of the combination.
It was a multifaceted thing, and I think probably what it was really was uncertainty. Investors hate uncertainty, and so from that standpoint, the ask gap to track was a big blow.
Yeah, a big blow.
Which is actually funny because it really shows you actually the moat that Apple has. The fact that Apple makes one change to their privacy policies and multiple companies go down, i.e. Meta platforms, and I think Google suffered a little bit with that as well. Snap. It impacted a lot of different businesses. Yeah. So it just shows you that stronghold that Apple has, actually, funny enough.
Interesting that you bring up Apple, because I actually think it's a little bit humorous that when Zuckerberg came out with his VR and Oculus, like everyone just like ragged on it. It was very hard to find a positive article about it, and people make fun of it, and everyone's tried VR already, it's already failed, this isn't going to work, no one wants it, and all that. And then recently Apple's really been announcing their VR headsets, and I have yet to see one negative headline. Right. And it's just interesting how much the media adores Apple. Right. They just love it. I mean, I love it too, but it's just, you can really tell how much control the media has over the investor psyche.
Oh, no question. Yeah, there's a lot there. One of the things to remember when you find yourself in this situation, so you have this stock that you bought low, and it for a very good valuation. It was a deal when we bought it the first time, and then it runs up to maybe what would have been fairly valued, or in our opinion, and then just drops down to being undervalued again. So don't just read the headlines, read the articles, read the arguments, but then go back and then look at the company again. Go refresh yourself on the fundamentals. Right? Are they still making money? If they're making money hand over fist, you're probably fine. You're going to get a temporary blip, and that's precisely what happened.
And read the well, they don't do a shareholders letter, but read the opening comments. At least read the opening comments in the conference calls, and also the questions to the analysts. They will give you a lot of idea. And it's unnerving when you keep hearing people say no one uses it anymore, and you're thinking, I have a lot of my personal net worth in this company that everyone's hating, and whenever you would try to engage in a conversation right away, it was never like, oh yeah, maybe they'll come, maybe it will be okay, or maybe they'll pull reality, or maybe Mark Zuckerberg actually does know what he's doing. It was always, no one's using it, it's dying. It's only for old people to argue about politics. TikTok's better. You name it, it was a negative sentiment there.
So going back to what I said before about go back to the business and go back and read the quarterly reports and whatnot, they were still growing their user base at that time. The most recent quarterly call, the 2023 Q1, they said they had a 5% increase in their family daily active people to 3.02 billion users in March of 2023. And their family monthly active users were 3.81 billion, which is another 5% increase year over year. So they're still increasing the user base. So that argument that no one's using anymore was simply not true.
Yeah, and I think the only area that decreased by 1% was Europe. I think Europe saw a decrease in use, but everything else has been growing by quite a bit.
Right.
And they're a worldwide company. Very much so.
Now, granted, the majority of their revenue, actually, their lion's share is made in North America and Europe.
Canada and
in the U.S.
U.S., yeah. But they are a worldwide company, and they are growing. And it's very interesting that people get really caught up. There's two ways people get caught up. They get caught up in their own country, which makes sense because that's what you see. And they get caught up in their own age group. Right? And sometimes they get caught up just in their own small community because, and I agree, like Facebook is more of an older person app. But there's still a lot of younger people who use it. Marketplace is used a lot, and there's a lot of people who still post on it and whatnot.
Right.
And Instagram is definitely still used by many different ages and demographics.
Yeah. The point being, though, is if you have a network with that big of a user base, there's probably something you can do with it to generate more revenue at some point. Yeah. So one of the things that they're doing now is trying to monetize WhatsApp.
Yes.
Via consumer to business or business to consumer.
And I've actually seen a lot of people put the WhatsApp number and link in their Instagram bios.
Yeah, and you're seeing that increasingly.
Increasingly for a lot of people who sell things or affiliate links or whatever.
Yeah. So, I mean, you again, it boils down to what do they have as a network and whatnot, and how powerful and sticky do you think that is? Yeah. And what can they do with it to monetize it?
So since we kind of talked about what it's like or why we bought it, what it was like to hold it, and full disclosure, we're still holding it. And we're still long.
Again, not investing advice.
Not investing advice at all. So why don't we go over the most recent earnings and go through what we found there and what we like, what we don't like.
Sure.
And just where we think the company's headed given what we know.
Okay. Well, I alluded to it before. One of the things I like is that pretty much half the planet uses something of Meta platforms on nearly a daily basis. Like, that's just unreal. Like, that is a network. Like
3.81 billion.
That was, I think, yeah. So basically, just a little over 3 billion people use some Meta product on a daily basis. And even more than that, 3.8 billion people use some sort of Meta product on a monthly basis, which is unreal. And that user base was still growing, even though they got pretty much half the planet on there. The revenues, they've taken a bit of a hit. And that, I think, in part, is twofold. One, partly because they asked App not to track. So their revenues were down year over year. So from 2021 to 2022, they're down about 1%. Their costs and expenses were going up by about 23%, and of course their income from operations declined by a fair margin. And that's in large part because of increased expenses because of that Reality Labs and whatnot. Now,
and their AI.
And their AI. That's right. That's the other thing they're doing a lot of is AI spend and whatnot. And they figure that's probably going to accelerate as well to a point. And they're looking at that being more of a shorter term kind of outcome as the AI spend, I think.
Yeah. Twice in the conference call that I can remember, they said AI today, metaverse tomorrow.
Right.
And I had actually read somewhere that they were turning away from the metaverse. And if you actually listen or read the conference call, they're not turning away from the metaverse. It's just that is their long-term game. AI is more short-term. And like I said, that's kind of like their mantra right now. AI today, metaverse tomorrow.
Right.
And so they're working on both. And they kind of wrap it up at the end. I think it might have been a question by an analyst who said that when you really think about AI and the metaverse, they are different, but they're actually also the same. They are going to eventually build on each other and all kind of be intertwined together. But AI, they really want to streamline. They're really about efficiency right now.
Part of the reason Meta popped off, I think, was a fewfold. One is I think they're trying to increase efficiency, and in part of the way of doing that, number two, is that they're doing a fair number of layoffs.
Yeah, and
which is
vision.
Right, which is unfortunate for those people who are losing their jobs, but probably good from a company standpoint.
Well, it's excellent for shareholders.
Generating revenue and just, trimming off the areas maybe that are not generating profit and whatnot.
Yeah. And I think they've also closed down hiring positions as well.
Yeah, I think they've closed some open positions as well.
So they are really, I think they might have said efficient or efficiency as many times as they said AI in the conference call.
But I mean, that's from a shareholder's perspective, that's a good thing, right? Because you want to see a good return on your 100%. Shareholders' equity. So how are they going to do that? Well, increase their efficiency.
So the other thing that was really, and this goes along with the efficiency part of it, is they just have tunnel vision. They want to execute, get their products out fast, and they really want to focus on what is working. And if it's not working, cut it.
Yeah.
And
that's a good business decision. I think they have some leeway to try things, make some mistakes, but keep building.
Yeah, and the big issue or the big question is when they make those mistakes, as long as they cut it.
Yeah.
And they said they were going to do that. And so as a shareholder, I appreciated that because it's like, they're trying it. Okay, great. If it doesn't work, get out of it. Trim the fat. You got to trim the fat.
Well, not only that, you got to evolve too, right? I mean, Facebook is not the same platform and company it was, in 2013.
If you don't evolve, you die, and they have more competition now. So they really do have to
up their game.
Up their game. Yeah.
So, I mean, and that's what shareholders want to see is, is money wisely spent. Businesses, they evolve, they find things that work, and they run with it.
They innovate.
And they innovate.
And if you don't evolve and you don't innovate, you end up being Blockbuster.
Right. Yeah, right? You end up being in a dying business. You don't evolve, you die.
So one thing I really found helpful as I went through the earnings call was Reels and how well Reels are doing. And for those of you who don't have an Instagram account or a Facebook account or a TikTok account, what Reels are just short form videos, and they take up the entirety of your screen, whereas if it's a post on Instagram, it's a little bit smaller than your screen. And these kind of came about because that's TikTok's entire platform, or little short form video, although they're also evolving into longer form. So Instagram, just as when Snap came out, they started stories because they had to compete with Snap. They decided to bring in Reels. Reels was not accepted happily with the Instagram crowd.
Right.
They didn't like it at first because it was like a hard left. Like you'd be scrolling and then all of a sudden you were on Reels and it was like, whoa, what am I doing? And people did not like it. They stuck with it. There was a time that they went back a little bit because they did try to make it all Reels and people didn't like that. Reels has done much better as of late.
Interesting.
Including on Facebook, not just Instagram. Now, because I have a Facebook account, I don't actually use it, except for Marketplace, so I wasn't sure how it was doing, but recently I've gone back to see and to use it more, and Reels are really taking off on there. And so they said that they've been able to monetize Reels both on Instagram and on Facebook. So everyone who says Facebook is dying, that's not necessarily true given the money that's coming in. So So in their call, they said monetization from Reels is up 30% on IG and up 40% on Facebook. So that caught me by surprise because I would have thought it would have been the other way around.
Right. So people are still using Facebook.
Yeah. So that's a pretty big jump, up 30% and 40%. Now, one thing about monetization that is interesting on the Reel side, it's not quite as easy as when it was just a post or just a picture because you watch Reels for longer. So they can't get, if I'm watching Reels, I'm watching the longest it can be on Instagram anyways is 90 seconds, a minute and a half. So if I'm watching a Reel, that's 1.5 minutes that I'm watching. If I'm scrolling pictures, 2 seconds max, I'm looking at a picture. So they were able to push ads in front of my face a lot.
They had pretty good ad density there.
And now they're trying to figure out, okay, how do we do this now with Reels? Because you watch the actual reel of the content you want longer. So they actually acknowledge that, which I like, but it'll be interesting to see, will they be able to monetize it the same as the feed? Right,
because you don't want, when you're scrolling on Instagram and it's just a picture, like you say, you can, every third... fourth picture you can throw an ad in there and there you go, and you can tailor that ad to the person. But how do you do that with a Reel where you're watching for a minute and a half or longer now? So how do you make that not intrusive and annoying? Because we never found it was annoying on Instagram before. And actually, funny enough, I'd often click the ads because they were so good. I thought, wow, I'd actually maybe use this product. So
now we actually turned back on allowing them to track us. I know a lot of people would think that's crazy, but I wanted to see if we did that because I noticed a definite difference in their ads for me when we said ask app not to track. The ads were bad. They weren't great. They weren't targeting who I was. So I actually did turn on ask app not to track. One, because I actually like the targeted ads. Does not bother me at all. And two, as an investor, I wanted to see the difference.
Yep.
And there is a big difference for those who don't allow the app to track and those who allow it to track. But one thing that's interesting about ads on IG and on Reels, versus the feed, that's like where the pictures are. The ads on the Reels, and this is just going to be an advertiser thing, they have to be better. And I noticed that about TikTok. Like when I'm on TikTok, I never hit a promoted
The ads
or
on TikTok
sponsor.
are terrible.
I think it's like the delivery method.
Right.
I have yet to click on a targeted ad on Reels.
Yeah.
And I think that's an advertiser problem.
Okay.
But at the same time, that does affect Facebook, Meta, obviously.
Yeah.
They did mention like they got to figure this out. But I mean, ads are increasing, so
yeah. Well, ads are increasing,
monetization is increasing.
Well, I mean, it becomes one of those things. They have a bit of a toll bridge mode, right? Where else do people go? If you have a platform that can offer more targeted ads because they have better information and whatnot, you're probably gonna go there as an advertiser.
Yeah.
You can charge more.
Yeah.
Now, having said that, actually, the funny thing is, and I'm not sure during the most recent quarterly call, the revenue was actually down year over year by actually a fairly substantial amount. Top line was down only marginally, so their revenue was down only a small amount, but their net income was down a fair amount, again because of increasing ad spend on Reality Labs,
which we don't love.
But one of the things they did mention is that the dollar amount they're getting per ad actually dropped.
Right.
And part of that probably is because of the macro environment we're in. So in the advertising environment right now, maybe advertisers just don't have as much money as they used to.
It's also interesting to do year over year right now because we just came off 2020 and 2021 where all we did was spend enormous amounts in our house alone on our phones.
Yeah.
So that in and of itself is really going to affect. I've actually started comparing. I've kind of taken 2020 and 2021 out of a lot of social media stocks and started at 2019 and now.
Okay.
Because I just found that those were just such outlier years for them. It was just so good. I don't know if we'll ever have a time again, unless we have another pandemic, where people are going to just be doom scrolling and have nothing else to do but sit on social.
Well, and be given a lot of free money.
Also, okay, yeah, and then you combine that, yeah.
You give people all this money, you flush money into the system, they go and spend it. Yeah.
So I will say, as an investor, Reality Labs still scares me a little bit.
Yeah, I mean, again, I don't mind the innovation. It's just the amount of money that's being dumped in there. Now, one of the things that I noticed that jumped out at me in their conference call was that they're investing in things that you may not see even released to the public for almost a decade. So they are pushing that far ahead to try and push the envelope of their technology and stuff like that. And I mean, if someone's an industry insider, they probably have much more insight into that. But I've heard there's some crazy things coming. Yeah,
AI today, metaverse for tomorrow.
Yeah.
So it'll be interesting to see, but I'll definitely be keeping a very close eye on the cash burn of Reality and the projects they're working on. So in this most recent quarter, Reality Labs actually had an operating loss of $4 billion. So their revenue from Reality Labs was $331 million, which was actually down 5% due to lower Quest 2 sales.
Right.
That's their headset.
Yeah.
Obviously that is decreasing, so that's interesting. Expenses were $4.3 billion, which was an increase of 18%. That was mainly related to employee-related costs and restructuring. So that should get better, but I'll be watching that. And then for an overall operating loss of $4 billion. I don't think they could survive if they didn't innovate and they just decided like, oh, we're just happy with Facebook and Instagram.
No, I don't think I'd be happy with that as a shareholder either.
Yeah. But I'll definitely be watching. I want to see the projects that come out. I want to see how they're executing it. I want to see how the people take these new projects, how they adapt to them and whatnot.
Yeah. Well, and I want to see return on my investment.
Yeah, like that's the bottom line.
Bottom line, yeah. I'm going to watch their numbers closely at this point, especially their top line, the revenue. So from that standpoint, I think there's some maybe macro headwinds that are ahead of them in the way of maybe a recession coming and all that kind of stuff. There's also some legal things that are maybe down the pipes. So, I mean, from that standpoint, there's already a significant amount of the portfolio in it, and I'm kind of happy where it is.
And I think that Mark is actually going to do a decent job with this. I do, however, think that they are going to continue to have regulatory headaches because I really feel that the socials are sin stocks.
Yes.
Because of the impact they have on younger children and whatnot. And because of that, I really think there are going to be a lot of people fighting against it. So I actually think they're always going to have legal battles, much like tobacco.
Right.
And whatnot. And it's just something as investors you're going to have to learn to be comfortable.
To be okay with.
Keep your ear to the ground and just watch real carefully.
Yeah. No, I think that's a great summary.
Yeah. So that kind of sums up our whole conversation.
Yep.
Of Meta. If you have any thoughts or ideas on Meta, leave them in the comments or any other stocks you would like us to talk about. And we'll see you next week.